If you're holding altcoins right now, there's one uncomfortable question sitting in the back of your mind. How low can these actually go? Not how much you hope they bounce, not what influencers are promising. But realistically, in a worst-case scenario, what is the downside? In today's video, we're going to look at altcoins without emotion, without hopium, and talk about what history and structure tell us about drawdowns. This is memes to markets. Let's get into it. The first thing to understand is that altcoins are not just smaller versions of Bitcoin. They behave differently because they rely on three fragile things: liquidity, attention, and risk appetite. When those disappear, altcoins don't gently correct. They reprice violently. A 20% drop in Bitcoin can mean a 40 or 50% drop in alts. That's not manipulation, that's structure. In previous cycles, quality altcoins have regularly fallen. 60%, 70%, even 90% from their highs during bear phases. And that wasn't for bad projects only. That happened to strong narratives, strong communities, and coins people believed would never go that low again. Markets don't care about belief. They care about liquidity. One of the biggest traps is thinking it's already down so much, it can't go lower. But price alone doesn't create a floor. An altcoin can be down 80% and still be expensive if sellers are still present, buyers are absent, narratives are fading. Cheap is not a number, cheap is a condition. When an alt loses its key range, the next destination is usually not a little lower. It's the next major area of acceptance. That often means the previous cycle base, the point of control, or the value area low of a multi-year range. Those levels can be 30, 40, even 60% below current price. That's not fear-mongering. That's just how ranges resolve. Meme coins are a different beast entirely. They don't fall based on fundamentals. They fall based on attention decay. When attention leaves, support is an illusion. A meme coin can lose 70% in weeks, 90% in months, because there is no structural demand, only emotional demand. So what would change this outlook? Three things: Bitcoin stabilizing and reclaiming structure, liquidity returning to risk assets, altcoins holding key higher time frame levels. Without those, downside remains the path of least resistance. Hope won't stop a fall. Conditions will. This isn't a message to sell everything. It's a message to think realistically. Ask yourself, where am I wrong? Where is my invalidation? Am I holding conviction or just hope? The goal isn't to predict the bottom, it's to survive until the bottom reveals itself. Altcoins can go lower than most people expect. They always can. But understanding that risk is not pessimism, it's preparation. If you can respect downside, you'll be ready for upside when it finally returns. If this helped you think more clearly about your positions, like the video, and subscribe for more cycle-aware crypto insights. This is Memes to Markets, and I'll see you in the next one.